Let's dive into some of the data. I'm noticing that kind of limited reaction here in the indices. They're still holding on or below the lows from yesterday, but it did look like the treasuries rallied up a bit here. For the most part, though, personal income and spending numbers slightly lower on the bigger picture year to year, but in line for the core PC and the income in terms of the month to month.
Yeah, these numbers as expected. It's actually pretty busy right here below me in the pits right now on these numbers here, but these are as expected, and the market is just waiting for tomorrow. That's, it's kind of next, what's next, and it's what's going to happen tomorrow and then what's going to happen on Friday with the jobs number.
Yeah, you're talking treasuries, because the indices, that pit behind you is yet to open up, Scott, but I'm noticing here we're getting just a little bit of a bid. Again, really kind of just adding to some of the gains that we had seen in the overnight session. And as you mentioned, it's not just the indices. I'd imagine the treasuries, rates traders, again, we're all really just looking for that Fed announcement tomorrow.
No doubt about it. There's positioning ahead of it, and I think right now we're at on the CME Fed Watch tool. I think it's 82% of a 25 basis point cut, 18% or so on a 50 basis point cut. And Ben, what's really interesting, we have had this discussion for a long time. I am of the belief and in the camp that we don't need a cut at all.
Okay.
However, I'm starting to change my tune a little bit, and not because of what's going on here domestically, not because economically we're seeing weakness or anything like that, but because the continuing weakness that we are seeing globally, especially we got numbers out of Japan overnight tonight showing continued weakness, that they are set maybe for some easing. That, in my mind, is what the Fed has to do now to kind of preempt what may happen globally in the next 3 to 6 months.
Well, I mean, in theory, Scott, that's what they're trying to combat, right? Or trying to get ahead of, because it certainly isn't the numbers here that we've been seeing in the U.S. GDP, the jobs data has been very strong. We had a strong durable goods orders, retail sales for the most part. The consumer's out and spending. Again, while the wages, not necessarily rising at the rate that we'd like to see, but really what the Fed's concerned about here is more the global situation, correct?
There's no doubt about it. I mean, that's probably 98% of what they are focused on, because if they are truly digesting the data points here, there's no need for a cut.
Yeah. All right, well, the Fed's focus on the global situation in terms of economic conditions, but currency traders, especially British pound traders, are focused on Boris Johnson as he continues to make headlines. Now, the recent focus seems to be his hardline approach towards the Brexit discussion. It sounds like he's saying he will not negotiate until the EU is willing to bend on the backstop. Does this set up for inevitable hard departure or a no Brexit deal? Is that where we're headed, Scott?
Well, what it sets up is continued uncertainty. And how often do we talk about this, Ben, is that the market does not like uncertainty. Right. And right now it's probably as high in terms of the Brexit that we've seen. And that's why we are seeing the pound just get absolutely demolished. Yeah. It is down 28 cents, which 28 cents doesn't sound like a lot. But when you're talking about $1.21, which is where it's trading right now, it's down 28 cents in 2+ years. That's a massive move down. And, with his hardline stance here, there's not a lot of relief in sight.
No, there certainly isn't, Scott. This has been weighing on Brexit conditions have been weighing on the pound. If lower this week, it's going to be the 11th down week out of the last 14 weeks since the beginning of May. It not only impacts the UK markets, though, it's also weighing on the euro. Heading into the week, they're down 4 of the last 5 weeks as well.
No doubt about it, and that's all the activity down here, what's going on right now. And, again, it's what is really going to happen in the next 3 months, the next 6 months. Is the big problem really just focused on the United States and China, the tariff talk, or is it really now squarely that most of the world is in a state where it's very recessionary? Global growth is obviously slowing to almost coming to a grinding halt. And that is what's going on right now.
Scott, both the 6A and the 6N have been selling off into the U.S.-China trade talks this week, which I find interesting because I'm thinking, well, in the past we'd seen optimism associated with U.S.-China trade talks lift the 6A and the 6N. I'm wondering if this is a reflection of how expectations for a deal are low headed into this one. I mean, is that why we're seeing some of the weakness in some of these other currencies?
Yes, that uncertainty, and then again, I don't know how much this has direct relation to the sell-off there, but you got more tweets this morning with President Trump just talking about how China is not living up to purchasing ag products. And you know what? Every next tweet and every pulse that we can keep ourselves adhered to with what's going on with this is moving the market. And right now it's all negative.
All right, Scott, it's not just the Fed this week. It's not just U.S.-China trade talks. The jobs data is a major focal point as well. But with month-end activity, I'm wondering how much that number tomorrow is going to get, well, shadowed either by the Fed. I mean, really, is the jobs number on Friday going to be a market mover?
No, it's going to be post the Fed announcement, so it probably won't be. However, what it may do is if we do get a good stable number, not a blowout number, but a stable number, what it could do is set the course for the following move that the Fed might make. They're going to come out with their speak tomorrow after they lower rates, and they're probably going to lower a quarter, and they're going to come out with a slightly dovish stance in my expectation. However, if we get a decent jobs number, that may temper that a little bit.